Hello and welcome to another Money Mondays, which is part of the District of Columbia's DC Department of Small and Local Business Development's District Capitalized program. It's an ongoing web series about financing your DC-based business and managing that money effectively. I'm Camille Nixon with DSLBD, and today we're talking about Crowdbuilding 101, which is a form of financing for businesses. And it's also part of our series of webinars for our pilot Crowdbuilding for Capital. And bonus session, right after this session, we're going to have a mini information session about a specific type of crowdfunding called Kiva crowdfunding. This is a session offered every other month that we're going to truncate. Today it's starting at 4 o'clock just so you can get a little bit of information. A lot of what we normally cover for the information session actually happened, we're going to talk about during crowdfunding. So you'll get all the information that you would. That's at 4 o'clock today, so hope you'll stay for that as well. I'm going to pause here in case anyone on this phone, or on the webinar, or on the watching on the recording needs translation services. Feel free to reach out to us. We'd be happy to arrange that. Depending on the language, we may need up to 5 business days to make those arrangements. A little bit more about DSLBD and the projects that we work on in our Innovation and Equitable Development team. As I said, we're a DC government agency, and we're focused on supporting your business or your business idea through all of the stages of concept, implementation, licensing, and growth here in the District of Columbia. Our team, Innovation and Equitable Development team, focus on finding innovative ways to help you do that, to open, grow, and operate in the district, and also including that, how to get to financing to support your business at all stages and really meet you where you are. And that's the essence of our District Capitalized program, trying to connect you to the products, the guidance, and the network of funders as well as each other to help you open and operate your business in a financially sound way. A great tool, if you haven't used it before, is the dcbusinesstoolkit.com. That will connect you to all sorts of information, events, funding, guidance, partners. We have over 150 business support services coming out of partners and DC government agencies, so feel free to tap into that, as well as the DC Kiva Hub, which I'll talk about later, and the tons of trainings that we do. We post most of them online, so you can attend live, in person, or online, and we're always available to connect with you to answer your business question and connect you to resources to help you. And that's at inno.ed@dc.gov. And I'm also available through that email as well if you want to connect with me. And we ask that everyone stay on mute throughout the presentation except during the Q&A session. Thank you. So looking at the big picture of financing your businesses, there are many ways that people do it. And we started exploring as an agency both investment financing and crowdfunding. They're not an option people often pursue. More people go after using their personal finances or getting fundings from friends and family. However, as you're looking at higher amounts of money and or financing that's more flexible and responsive, some of the traditional financing like through banks aren't as open to businesses at different stages and different experiences. So we started exploring that and sadly found out that the majority of businesses that are going through investment, crowdfunding or crowdfunding investment are not people of color, they're not women, and it's not making this option of financing accessible to everybody. So DSLBD started exploring with our partners 20 Degrees, which is a local DC-based business, and the Women's Business Center, which is based here in the district as part of an SBA network of women's business centers. We started looking to see what could we do differently, what we could do to support businesses to explore the options of crowdfunding and specifically investment crowdfunding. And we were fortunate to get the support of the National League of Cities, who has an annual City Inclusive Entrepreneurship Program. It provides the grant to offer to you the Crowdbuilding for Capital project. And this is a project that will help pilot exploring, helping you explore how to finance your business through crowdfunding and getting investments. And both of those might seem foreign concepts, and they also might seem kind of scary for some people. But through the webinars that we're offering, this is one of them, as well as coaching and other guidance, we hope to help you explore the options, make you feel comfortable with the basics, and to know when's a good time to pursue these options. And if you're ready now, we can take you further to get you queued up to be able to pursue crowdfunding through WeFunder. Here's a series of webinars that's part of the pilot. We're, of course, today doing Crowdfunding 101. We just had our first one last week, hosted by 20 Degrees and the partner, The Marigold Effect, and they're all three are on the phone today. Sarah, Paula and Pooja are on the phone. So we did a sample webinar last week. We're doing this one, and we have 2 more to go. The next one is actually this Wednesday, and then the following one, I have the 2 dates, the 21st. The final one, which is the 26th, not the 21st, the 26th at 3 p.m. is our crowdfunded investment. And this is a link to get registered. Since you've already registered for this, you'll get announcements for the Wednesday one and the next Monday one. As I mentioned, in addition to the 4 free webinars that are open to everybody, we also have guides to help you navigate the process that are being developed and shared by 20 Degrees and the Marigold Effect, as well as coaching to help you get raised ready. The coaching services are only for businesses that qualify and specifically are prioritized for businesses that are women and people of color, because we're, as I said before, that there's not a lot of engagement for them in the space of crowdfunded investment. Also, to attend the coaching, you need to participate in at least 3 webinars. Here are the beautiful faces of our partners from 20 Degrees and the Marigold Effect. And although I'm presenting most of the content today, I'm inviting them in to jump in. They have, amongst all 3 of them, very extensive experience in this topic, and they'll be jumping in to share information and their experience related to different topics. And thank you very much. Paolo noted I use a lot of terms, and hopefully we'll break down the terms. If I don't, feel free to drop in the chat if you have a question. What did you just say? We'll be happy to explain that. Yeah, BIPOC is Black, Indigenous, people of color. So let's do a dive into Crowd Building 101. So this is our roadmap for where we're going through the process, including today's webinar. As I mentioned, in order to access the coaching, you'll need to be eligible as a business and also attend the webinars. And we might be able to offer the webinars a second time if you happen to miss the one last week. This is the link to last week's webinar. I sent that out to everybody. It'll be available on our main webpage on the Eventbrite as well. I want to do a quick recap to bring forward some of the topics that 20 Degrees presented last week. They relate to what we're talking about today, and also to give you kind of a context in case you missed last week. So they struck a couple of very strong points, and one of them is the distinction between your business model and your revenue model. And it feels like they're intertwined and they are connected, but think about the business models of what you're actually delivering, be it a product or a service, the value of that, who you're delivering it to, how you're delivering it. Whereas the revenue models, in doing that delivery, what's going to make you money? How are you going to generate revenue, sales from delivering that value, good or product? Another important distinction is revenue, so sales, money that you make, versus capital, which I always think of money right away as capital. It could be anything of value to your business. It could be a donation, it could be in-kind services provided by someone. And there's a distinction between the two: money that you earn and money that you obtain that has a value to your business. Another important thing to think about as you're trying to pursue capital is what types of needs do you have? Some capital is better suited to your short-term needs, keeping the lights on, floating salary staff while you're waiting for a contract to get delivered, contract to be awarded, whereas other financing is more suited towards a longer term. You're trying to grow your business, pivot your business, expand it physically to a second location, or expand the line of products or services that you're offering. So it's important to have a distinction between what's your short or long-term needs and what type of financing can support each of those. Here's this chart again, which I love because it really shows where people are really using getting the money to finance their business. A lot of it is your own bootstrapping, your own personal finances, and the money that you might get from a full-time or part-time job that you have. But many people, the next highest category is asking friends and family for donations or contributions to your business. Loans and debts are common. Investors comes in third with 3.4%, and crowdfunding is right there at 1.7%. But crowdfunding and asking friends and families are ways that businesses use to finance their business. Now, crowdfunding has not always been around as we know it for businesses. Actually, before 2012, you actually had to be an accredited investor. And there's a whole industry, and still is, to be an accredited investor in order to put up money. Can you imagine just someone saying, I'm going to sell X, Y, and Z, and they start selling stocks or shares to a business and there's no check or balance to make sure that the business is valid, that the transaction is legit, and that in the end, that investor will actually have access to that value that they invested through the stock or through the investment. So when the Jobs Act was passed by President Obama, after that, getting non-accredited investors, be it friends, family, individuals, and using crowdfunding became a possibility. So that's where we got started with crowdfunding. And that means it's fairly a young 10-year-old process, but it's just blown up in use and people that are trying to offer ways that you can crowdfund. This is a really brief roadmap on how crowdfunding works. Different types of crowdfunding we'll go into in a minute. This might vary depending on that, but they generally all kind of have you starting with your business or business idea, and that you create your ask, which means that you're calculating what you need the crowdfunding money for. We talk about the short and long-term needs. What are the needs that you're going for? How will you use the money? And most of all, you want to see, will this money that you're crowdfunding, what will it do to move the needle on your business? Whether it's expanding, sustaining, how will that money, that ask, help your business? And then you apply through a pitch platform. There are ways that you can do this without a platform, but the legalities around that, if you are interested in exploring that, we can talk about that offline. Reach out to info@dc.gov. But in the end, I'll probably tell you what I'm telling you right now is that you should probably look initially for your first crowdfunding to go through a platform. So you apply for the platform, and then how you apply depends on the type of platform that you're using. And some of it's very simple, like when you see with Kiva, it's super, super simple. Others are more complicated, and generally the higher amount of money that you're going for is probably the more information the platform will be looking for. And then you launch your campaign. And the launch can take different forms. Most of it's online, but sometimes the platforms have you do in-person pitches. It might be just your photo and written text. You don't actually have to speak with anyone. But you launch your campaign for a certain period of time. And during that time, you're actively engaging your crowd. And we'll talk a little bit later about what it is to build a crowd that you would actually engage. And going through a platform helps because often baked into that is their much, much larger crowd of investors, lenders, supporters that you would not know otherwise, but they see your pitch, they get engaged because you have a compelling pitch and decide to invest or lend to your project. Once you complete your campaign, that's when the money starts rolling in. The money from all the individuals who contribute to your crowdfunding campaign are pulled together and awarded to you as a business. And then depending on the type of crowdfunding platform you're using, you may need to report out to your contributors. If it's a type where you have to repay, a loan-based crowdfunding, you'll need to repay that, or you might have a reward to give out. But for all of the campaigns, whether it's required by your platform or not, we definitely want to communicate with your contributors, both to thank them initially, but keep them updated on what's going on with your business. And if you're doing a repayment and you happen to be coming short on repayment, just give them a pulse check where you are with your business and where things might change if you're having trouble repaying. So that's the general walkthrough of how crowdfunding works. It may feel a little off-putting, like this is a whole new world to you, but I assure you, you probably have already crowdfunded. Every day we're doing things to raise funds. If you've ever asked your friends and family, which most people do, we saw 70% of businesses ask friends and family for donations or contributions to their business. That's crowdfunding. If you've attended a potluck and had to bring a portion of a meal, all those pieces together became the one big meal everyone's enjoying. That's crowdfunding without having to contribute money. Family reunions, they do donations or contributions to pull together to buy the shirts and the food and the rental of the space. That's crowdfunding. And probably one of the mega crowdfunders of all time, the Girl Scouts. They have a rewards-based crowdfunding where in exchange for money, you get some cookies in the back for the donation that you give to their campaign. So although this process may be unfamiliar to you, I think in
And I'm
general, most
Olu,
people
by
have
the
had some
way.
exposure to
Thank
crowdfunding.
you.
All right, I'm gonna look to see if there's someone off of mute.
Thank you.
So now I'm going to touch upon a couple of the benefits of crowdfunding for businesses. And I forgot to mention at the top, feel free to use the chat to introduce yourself. And also mention if you've gone through crowdfunding before, or if there's a particular type of crowdfunding that you're interested in. We'd love to hear if you have any insights on benefits or challenges to crowdfunding if you've gone through it before. But some of the benefits, and there are quite a few, of course, money. If you're trying to raise capital, this is an option. But people think often of the money, but they may not think as much about the brand and the building a community that happens. And that's actually even more powerful, both for building your base, building a future customer base, and also being able to tap into that community that you've built beyond. It's a great way if you haven't had online presence before. It's a great way to help start that. Often people doing crowdfunding, this is their first opportunity to kind of focus in their efforts on their brand, on their name, on their website, to start their social media handles. So if you don't have those things ready, it's not the end of the world. Going through crowdfunding might be just the push that you need to start getting those things set up. It also levels the playing field. It really is helpful for businesses who might not be, for instance, a strong pitching in person, or maybe English is not their preferred language and they're not as comfortable in that. If you're pitching your campaign online, that won't be as apparent. It kind of levels the playing field for businesses. And even if you're a startup or a concept stage and you feel kind of in the room of established businesses, you might be dwarfed out on the platform. It all becomes a level playing field. An excellent use of crowdfunding is proof of concept. You probably have tested your business idea to see, hopefully you have, to see if it's something that's viable that would raise money, but exposing it even to a larger crowd really helps test the waters to see, are people interested enough to contribute to my campaign? Sometimes it's a chance for you to get feedback from people who either have contributed or might be interested in contributing. So it's a great way to see if your business is as viable as you think it is. Is it something you're selling a value of something, your product or service is of value to potential customers, in this case, investors. And it's also a great way to demonstrate that you actually have the ability to crowdfund. Some crowdfunding platforms actually look to see if you've already crowdfunded someplace else. So something like Kiva is a great place to start because it's very open and welcoming. We'll talk about that at 4 o'clock. But one of the things that often other crowdfunders are looking to see, have you raised through Kiva? Have you raised through another crowdfunding platform? Now, that's all the benefits or some of the main benefits to you as a business. But this is also very beneficial for investors. As I mentioned before 2012, it was only a pool of investors who got accredited to be able to invest money into businesses. Now, it's thanks to the Jobs Act, it's open to everybody. So it's inclusive access, not just who can do it, but also the amount of money to get into the game to be of support to a local business could be as little as $10. Also, when you're investing at even small amounts, but also big amounts, sometimes you don't want to be like the person carrying the 6-digit investment in a business. You want to be maybe the one carrying a 5-digit investment with a whole bunch of other people doing the same. So it disperses the risk to you, to your investors, that they're not holding the whole pot. And most importantly, it helps strengthen the local community or economy. So many people want to support local. They want to make sure that a business in their neighborhood are still there beyond just there what they're able to support as a customer. So it gives them a chance, along with other community members, to support the local economy and the local businesses and characteristics of their neighborhood through crowdfunding and supporting them. Now, with the pros, there are some cons. Again, if you're on the chat, feel free to drop in some challenges that you may have had as a crowdfunder. And also, I invite my colleagues over at 20 Degrees to jump in as well. But here are some of the disadvantages. It does take time. If you want to have a compelling pitch that really resonates with your audience of potential investors, funders, and also stands out in the crowd, because as you can imagine, many businesses are crowdfunding at the same time. So how will you distinguish yourself through your photo, through your text, through your companion online presence? So it does take time to build up all of those. And building and actively activating your community and your crowd is important. Building it takes time, and sometimes, as I said, you can use the crowdfunding experience to start building that. But also you may want to have it built deeper and wider before you start crowdfunding. Some of the more advanced crowdfunding platforms do ask for you to have a demonstrated base, but some will allow you to use that activity of crowdfunding to build that base. But it takes more than a moment. As you can imagine, you're online. People's eyes are everywhere. To get them to look, stop, remember, and contribute is more than a notion, but it's definitely possible, but it does take some time. Also, there's often a cost to crowdfunding depending on the platform. Kiva is free, but not all platforms are free. There's a cost to apply. There may be a cost depending on the amount of money that you receive as an investment. There'll be a cost to you for that. And it varies greatly. And we'll talk later about a guide that will help you navigate to see the different options. And finally, as you're looking for crowdfunding, this is true for anything that you're doing, you're just stacking your capital as you're looking for grants and loans and crowdfunding and investment. They all interplay, not just that they all interplay to give you money to use for your business, but they interplay that depending on the staging when you use them. So it's possible if you're pursuing crowdfunding for a certain amount of money, and you are able to raise that money, that might impact how much you can do for something else. If you go for a second type of crowdfunding later, they will be looking back at your first round of crowdfunding in a positive way, or it might be a negative way. Be positive, they're very happy to see that you raised the money, or they're concerned that you're already in debt from that first round of crowdfunding. They're not sure they want to give you a higher amount. So this is something as you're looking at your options, as 20 Degrees shared on last week's webinar, looking for your short and longer term financing needs, and then finding the appropriate tools to address those. So I'll pause there and see if there are any questions in the chat. And also to 20 Degrees and the Marigold Effect, if you had any additional comments and thoughts to share about the benefits and disadvantages of crowdfunding.
Yeah, I would just like to add one thing. I always ask companies to think about if they're doing a crowdfunding campaign, is that if you ask money from your community as investors and you never end up paying them back, if that somehow could lead to any negative feelings from your customers about your business. You always want to think about that your investors might be also providing you with the revenue from the sales, and you don't want to this investing relationship is also about trust.
That's an excellent point, and that's some of the tips I saw a comment in the chat about the successful elements of crowdfunding, which we'll talk about towards the end. But yeah, the benefits and having that crowd, building the crowd and keeping their trust. And I've had businesses who are having trouble if it's a loan-based crowdfunding platform, they're having trouble repaying, but they're communicating and conveying to their investors why. And that goes a long way, because at least they're acknowledging there's a little bit of a hiccup and what their plans are to fix it, and keeping people in the loop. Thanks for that, Pooja. I'm looking to see if anything else in the chat. If not, we'll move on to the types of crowdfunding. I mentioned a couple. I was talking about everyday crowdfunding, the example of rewards, and Kiva with loans. So we're going to go through the 5 main types: donation, reward, membership, debt, or sometimes called loan or lending crowdfunding, and equity. And just so you know, the equity-based crowdfunding is the one that the larger pilot that we're working on right now is focused on. And then the Kiva mini session I'll do later is a debt-based crowdfunding. So for donation, and this is probably one that most people have heard about. They've heard of GoFundMe campaigns that have happened, and that's a donation-based crowdfunding, where it is like what it sounds like. People are giving a cash donation to a business or an organization or an individual. And it seems the most attractive because it's a donation, you do not need to repay it back. However, if you're going out into the space of GoFundMe or another donation-based platform, you are in competition with other charities and other causes. So just imagine you're asking for money to expand your inventory, and you're competing right up against someone who needs money to pay off their hospital bill, or they've just gone through a natural disaster. So it's not something that you should be discouraged from using donation-based crowdfunding, but I would definitely use it if you're going to have a specific financial hurdle. You need money in order to get that inventory, to get to a contract that you have with a large reseller, with a large grocery store, or you need that money because unfortunately your restaurant just had a fire. So something that's a very specific financial hurdle, I think, would resonate better and more competitively with similar ask of charities or individuals who are struggling around looking for donations. This is something where there's probably not a lot of paperwork for you to file, but you should put onto yourself the opportunity to thank people for when they donate, and again, give them updates as they're going through. And throughout, I'll give some quick examples of businesses who have gone through this type of crowdfunding, and I'll mention later where you can hear their voice, hear them testify what their experience was like. Rewards-based crowdfunding also might be familiar to you through Kickstarter. This is when we start entering the space where more businesses use these. Non-businesses could as well. But this is something where people are contributing to your campaign, and then in exchange they get a little perk, or it might be a big perk, but it's something in exchange. It could be a product that you make. This is a beauty supply company that gave beauty services and products through their Iowa Fund Women campaign. You could also give a service reward. Perhaps you don't have a physical product that you make, but that you do tutorial services to help kids improve their scores for tests. Perhaps the reward you would give would be an hour of a free tutoring session or a special tutoring ebook that you share. You often with the rewards-based crowdfunding, it's a chance to tier up or scale the value of your rewards. So if someone contributes $10, they'll get something, but it'd be kind of valued at a smaller amount, like maybe a sample bottle of your hair product. If they give a large amount of money, maybe $1,000, they're gonna get a whole gift basket. They might get even extra services through your business for that, but it's good to try to tier up the type of rewards so you incentivize people to maybe give a little bit more to your campaign. There is a cost for giving those rewards, the literal cost, what it takes for you to make that sample or give that service, but also you want to kind of make sure that the rewards you're giving balances out the investment that you're getting. So you don't want to end up actually having your campaign raise money, but in trying to get those rewards out, it actually costs you money much more than what you raised. You want in the end to make a profit from your campaign. And also it's something where it takes some time and to make sure to get those rewards out, get them distributed on time. I knew a business who was raising on a rewards base. It was 2018. They started their raise. They did not follow up with their rewards. People were very, very upset. And they ended up spending most of their time and money that they raised trying to get those rewards back out to people. So you want to build in the time to do that. Kickstarter is probably the best known one. A local crowd is smaller, but they actually have a great feature where they encourage businesses to give rewards that maybe are sponsored by someone else. So say you're a landscaping business, you're not actually able to mow everyone's lawn who contributes to your campaign, but you could get perhaps bouquet flowers sponsored by another business as the reward. So you are giving out rewards, actually another product that you're not providing yourself, but is sponsored by another business. They're able to get some credit for their sponsorship of the reward, and you're able to give something that maybe people would like to use, a bouquet of flowers. Membership-based is kind of like a rewards. Probably smaller amounts of donations are received, and your perks are always consistent over time. So it's kind of a stream of regular money that you might get in exchange for perks and rewards. Think about it if you were operating a cooking company, you cook and do demonstrations about food, and you do a lot of Instagram videos, perhaps for a donation of $1 or $5 a month from a membership or a patron who's subscribing to your campaign, they'll get early access to those videos. Or if you're doing an on-site demonstration every quarter, they'll be able to get one free pass to your demonstration. So this is something where people contributing, the amounts might be smaller, as small as $1 or up, and that you're giving content or something back to them on a regular basis, monthly, quarterly, whatever your schedule is. But you're very clear up front what they'll get for their contribution and when they'll receive their perk. As you can imagine, this is something we do definitely need to be consistent. It's not a one-time reward, it's an ongoing set of rewards. So you need to have a schedule and really think through up front, what can you offer, how realistically, how frequently can you offer it? And again, if something goes astray and you're falling off schedule, communicate. Patreon is probably the most well-known one. There's also Teachable. People who have skills or other services they want to educate people about. They can offer classes and things like that. Teachable is one of them. And this is actually a musician who used it to give early access to recordings or snippets of live performances in exchange for a monthly or regular contribution through a Patreon account. Debt or loan-based crowdfunding is what it sounds like. You have individuals who contribute money towards the campaign, and that all together, those funds are clustered together and are given to you as a loan, and then you repay it over time. And as you repay that loan, the money is then dispersed back out to the individual lenders proportionately. So say you have a lender who gave $25, a local community member who gave $1,000, as you're repaying back your crowdfunded based loan, maybe that $25 lender will get $1 back each month, whereas a $1,000 contributor will probably get maybe $10 back each month. This is a great way to get loans, and you may not be able to get a loan through a bank for different reasons. You're not eligible. You're too young as a business. You have other conditions for you individually or for your business that the banks aren't willing to they see as a risk, not willing to overlook. But often, crowdfunded platforms like Kiva will allow you to pursue a crowdfunded loan when often other banks will have shut you out. Most of the platforms that do loan-based crowdfunding do have a fee and interest rate. Kiva does not. And we'll talk about more about Kiva at 4 o'clock. That they most of them do. This is Griffin LLC, and she's a great example of both using Kiva to crowdfund $9,500 for her expanding her business, hiring someone to help her provide services and manage her business as she was expanding. But she just had a wealth of other benefits that came through. Her crowd grew. People came out of the woodwork, not just to give money, but to offer their time and their expertise to help her grow her business. She made new connections with other similar businesses, and they're now teaming up together to go after contracts. So it was a way to get money, but it's also a great way to build that crowd and that community that will go a much longer way than sometimes even the money that you raised. So again, at 4 o'clock, we'll give a quick deep dive into Kiva and see if that's something that might fit your interest. And the final of the 5 types of crowdfunding is equity-based crowdfunding. And this is what this pilot is about. We're generally giving you guidance about financing options, specifically crowdfunding. On Wednesday, 20 Degrees will come back on at 3 o'clock and talk about business investment, both debt and equity. And then next Monday, we're going to talk about putting it all together. How do you crowdfund equity investments? And WeFunder is one of the examples of that. Republic also provides, and there's several platforms that do. But back to the basics of what equity crowdfunding is. In exchange for investment in your business, you're giving a percentage of ownership or profits to the investors. And this often is used, not exclusively, but generally is often used for larger amounts of capital. And it's helpful when your business has a unique offering, some a service or product that's unique, or that you can convey how it is something distinguishable from your competitors or something that people may think they have heard of before. It's also something that you're scalable, because investors like to see not just a payback on their current investment, but they want you to grow so their investment can grow as well, right? So something that you're able to scale up beyond what you're offering in your pitch. Often the business get to select their own terms, and there are many platforms out there that you can pick and choose. If one platform is asking terms you're not comfortable with, you can explore other ones. It does assume, for most platforms, assumes that you have a strong marketing and an investor network. The platform can help you get to a larger investment pool of investors, and also support your marketing, especially that the platform itself is marketed and people are coming to that. But you individually as a business should feel comfortable promoting your business and tapping existing network. Often they would like to see that you've already done crowdfunding elsewhere. So they would like to see you've done Kiva crowdfunding or Kickstarter crowdfunding, but that you're both comfortable with the process, but you've also already started building that community that you can tap later. And as you mentioned, with the ability for unaccredited lenders to contribute to invest in campaigns, there's some legal implications for doing equity investment crowdfunding. There are federal and state rules that you have to follow. And this is something, if you're exploring, you should definitely get guidance. We'll offer some through this project. But if it is something that you're exploring, you need to follow the rules. And there are things that you would think would be, oh, it's okay to kind of promote my campaign while I'm doing the platform. That's a no-no. So when you get to this stage and you're exploring, definitely watch our videos again that we'll offer on this Wednesday, and next Monday will be on our YouTube channel, and connect with a company like 20 Degrees or another DSLBD or another entity who can help guide you through the process. And again, here are those next two webinars, the 21st and the 26th at 3 p.m. Will be about business investment 101, equity and debt, and then also crowdfunding investment featuring WeFunder. I mentioned earlier that the resource to get more tips about each of the types of crowdfunding options, and also to get some examples from businesses who have gone through these crowdfunding platforms. So for launching your crowdfunding campaign, a publication was produced with the Washington DC Economic Partnership, DSLBD, and DC Women's Business Center. I encourage you to download and read that. It's a great overview of each of the different types, examples of businesses who've gone through it, and some tips on both preparing for and using the platforms. We also had a launch related to that publication where we had businesses come on and give their testimony on how they approached and used each platform. That's available on YouTube now, so I encourage you to listen to that as well. And I'm going to quickly go through the next couple of slides. Just want to make sure that we get to the questions and answers before we kick off our 4 o'clock training. So this is kind of an image, a big image, a general image of different types of financing. As you see at the very bottom, you need a strong financial management, and no matter how little money you have, starting to figure out how to manage your money, organize your books, and have a business bank account, and insurance. Generally, sales and bootstrapping using your own funds of friends and families, the next way that people get capital, and the crowdfunding and microloans, including through Kiva, is another option. After you go above sales, the options can switch back and forth, but generally the investing option, the equity investment option, is towards the top of your stack. So there are different ways to combine these, and this is something you can always reach out to inno.ed@dc.gov and book time with myself or my colleagues to talk through how do you stack your capital and time what you're asking for and what you're using it for. So someone earlier in the chat said, what are some tips for successful campaigns? So here's some secret sauces. I hope I can show my chat so I can see. I hope for those who've gone through crowdfunding before, we'll also throw in the chat what some of their secret tips are, as well as my colleagues over at 20 Degrees and the Marigold Effect. But here's some that you should think about. I call it the tight 10, tight 5 if you could. So it's how you can present on your business, what it sells, who you're selling it to, what you've done so far, where you want to go, and the all-important why. What is your driver? Not what you sell or how you sell it, but what is the driver behind you even starting your business and trying to grow your business. So you want to be able to have that down within 10 minutes for a pitch, but even 5 and 2 minute marks are great too. But I think if you have a tight 10, you'll be able to use that and break it down even further for different types of crowdfunding and pitches, including elevator pitches. I mentioned before, you need a compelling use of funds in your pitch, and that should be aligned both with the script that you have written out and is being posted online somewhere, the photo that you're using, and the deck, which is a slides of a presentation. Your deck should all be coordinated. It should be compelling. Again, when you're going through crowdfunding sites, it's probably you and several dozen, 100 businesses who are all on the site, and investors, lenders, contributors are looking and browsing. You want to have a picture and a tagline that will make them want to click to learn more. And then your description on your landing page of your individual campaign should also be compelling. Another successful step for businesses who are crowdfunding is that they've tested the waters. Even if you're at the concept stage and you're using crowdfunding as a concept or idea stage business, you want to be able to see, does someone want to buy this piece of pie? I know your mama says she likes the pie, but does someone else besides your mama want to put some money out for that pie? Or they're willing, if you have an idea for a service, has someone been able to try your service and you've tested it and kind of tweaked it? You want to be able to test the waters before you start crowdfunding. Again, you can use crowdfunding to further test your waters, but it might not be the place to start it initially, except for maybe Kiva. They're okay with that, but other types of crowdfunding platforms, you already have tested the waters a bit and tested your market to see if it's a product or service that people want to buy and support. That's right. Stand out from the noise. Yeah, being able back to Pooja just shared a comment in the chat. That compelling use of funds, you want to be able to rise above and make yourself distinguishable from other businesses on the campaign. A couple of other tips of successful funding is that you're willing to activate and build and ask your crowd. Many times, especially for first-time crowdfunders, they are not interested in asking people for money. It makes them feel uncomfortable. Asking friends and family seems like, oh, I don't know if they're going to help. I have to tell you, 100% of all the campaigns I've helped people with, everyone seems to be surprised how many people want to help them. People who, if they can't give money themselves, they want to be able to put information about your crowdfunding campaign on their social media, on their Facebook, to let their network of people know about it. But you have to be willing to ask and be willing to build, actively build your crowd. And that's like every day, every couple of days, doing something, posting something on social media, calling some people, emailing some people. You have to be comfortable doing that. And you have to be willing to continue that engagement beyond just your raise, to first say thank you for people who contribute, but also giving them updates. It can be done through something simple as an email. I know one business I just heard about last week at a pitch competition. He does a TikTok every day. I think he makes chocolate. So every day he just takes one step in his chocolate making practice and does a TikTok on that. It could be when the guy delivers the bits of cocoa, he has a quick conversation with that vendor. When he's melting the chocolate, he shows how he does it. Every day he does like a little bit of a thing, and people love it. People just love to see the behind the walls, behind the door, what's happening. So it doesn't have to be something spectacularly new that you need to share, but keep people engaged. Keep letting them know that you are part of my crowd. We are together, part of a community. Thanks to your contribution, we now have met, and we want to stay friends with you. And also your willingness to share information. I just heard a pitch recently where someone was asked a question about their financials from a potential investor, and they weren't willing to share that information. I don't know what the investors thought, but my thought was, I need more information. You want money from me? I need to know about your money for me to give you money. So it's something where you need to be willing to share information. There is a line where you may have proprietary information about the product or something that you want to think about how you share that, but your willingness to share about your financials. And believe me, if an investor is listening, they're not going to be surprised that you're not at your goal revenue level. That's not what it's about. It's what about how can that investment that you're asking for help you get to that level? So all this combined, I would say, and Pooja shared this comment earlier about trust building, being able to keep your crowd updated, to share information is super important. So that you have a building of trust. Again, it's not just about trusting that you're making good use of their money, is that you're now part of like a larger, slowly widening community around your business, and you want to keep them engaged and feel like they're part of your family, which they are now. I'm going to pause there and see if we had any comments in the chat, and also Sarah, Paolo, Pooja, if you had any thoughts about what makes that secret sauce for crowdfunding, please jump on in.
Yeah, I would add a couple things. These are all great. It's a lot about also demonstrating that you're having some traction. So maybe you have a little bit of revenue, well, in year one, but you said, oh, year two, a little bit more. Just investors to be able to say that you have progress. So don't be afraid if like your revenue amount isn't exactly what you're hoping to achieve. And then I think Darsha put it in the, sorry if I didn't say your name right, about what if you don't have community yet? Definitely something that we're wanting to work with individuals here about, how you can kind of figure out what that looks like, because for every product, every service, every business, how you go about it, how you build it, how you define yourself will be different. So sometimes you might be comparing yourself to like a coffee shop and you're like, well, they have community because they have people that walk in their store every single day. I'm not like that. But our goal with this pilot is to really help every business think about how to make this potentially accessible to you if you want it.
That's a great point, Pooja, especially that I know, especially for service businesses, it may feel like, oh, I don't think I may, if like say if you're a service business selling consulting services and your primary target is the government, how do you engage a local community? Like they're not going to care that you know how to move widgets for a defense contract, but they do care that that defense contract that you're trying to get through this investment will help you hire local residents. That defense contract will help position you to be able to support a secondary but related activity that you're trying to build up more DC-based businesses who are providing government contracting, and that this is helping you create that network by taking some funds from that. So there are ways that we could talk about how to help a business that may not seem like it's great for crowdfunding, a service business, or maybe a hair salon or childcare. It's all an option. I want you to walk away thinking that no matter what type of business you have, I think there's a way that you can leverage a crowd. If you're not ready for crowdfunding now, to start figuring how to build that community online through other ways so that when you do want to have crowdfunding, you're already like 10 steps above where you would have been if you had done nothing in the meantime. I'm looking right quick before we wrap up to see if there are any other tips.
Things we talk about is, do your users, this is borrowed from Lean Impact, one of our favorites, is do your customers, and that can be your community, because your community probably is your customers. Do they prefer you and refer you? And if that's true, then maybe they're crowdfunding investors, maybe they're customers. Ultimately, you need both. So it's really talking to your community. Paula, I thought, had a great comment in the chat about what are you offering people, and then we can sort from there if it's revenue or capital that they're bringing you. But you do have to talk to them, and that can be pretty scary and intimidating, particularly if it's for people you know. So we do have some thoughts about and some pretty proven practices about how you can identify the right people. They are close in with you, but they probably aren't the people you're talking to every day or even every week. So that's where sometimes thinking who your community is and where you crowdfund can be a little interesting there.
I love that. Do they prefer you and refer you? There are many things I prefer, but when I tell someone about this thing, I don't know. And you just heard from Sarah and Pooja and also Paula's in the background. But if you're going for both the trainings on Wednesday and next Monday, they'll be presenting. And if you attend these trainings and are an eligible business, you could qualify to get coaching from Sarah and her team. So if you like what she said, continue watching the webinars and sign up for the coaching service, which I'll mention at the end, how to get started with those. And looking at time, this one leaves a little bit more time for Q&A. So just some common things that you'll need to have ready to do crowdfunding. And again, if you look at this list and go, I have none of these things, it is okay. Through District Capitalized, through the DSLBD, you can book time with me to start learning how to build that through this project, including the webinars this week and next week, and coaching through the 20 Degrees team. You can get guidance on that. But here are some common things. Usually you need to have a business plan, which may seem overwhelming if you don't have one, but there's also a one-page version called Lean Canvas. And this is beneficial. Forget about crowdfunding. This is something you should just do anyhow, because you want to put on paper what your thoughts are. And this is a document, whether it's the short Lean Canvas version or a much more robust plan. It's a working document. As you're tweaking your business, getting new information, testing the waters of the market, you're going to be revising it and improving it. And it's a living document you should be working on, but you should have that that plan together. A great photo, actually the photo that you saw right now for Kiva is a photo of our client, Main Roads, right, Linda with Main Roads. I forgot how much she paid. It was like a nominal fee to get like 100 photos. She has great photos. She uses for all sorts of purposes. It's a great investment, but there are other ways you can get cheap photos, zero cost photos. There's a webinar that we have on our YouTube channel specifically about taking photos for pitch campaigns, but having a good photo is great. Even some platforms allow you to put a video clip, which is also something, but the key about the photo and the video clip, if you're allowed to do that on the campaigns, is that it really personalizes who you are and what your business is about. You may have heard me use the word deck a couple times. Those are the presentation slides like this that you can do through PowerPoint or through Canva or some other free software to create the slides. This is something you want to create after you had your tight 10, your tight 5-minute presentation written out. These are the slides visually that will complement and support that deck. An online presence, whether it's your website or social media, most campaigns look for that. And again, if you don't have that set up, it's okay. You can use your first crowdfunding campaign as an excuse to get started on that. Everyone starts from somewhere. And remember that your online presence is your presence. And if you're tapping friends and family, their network too. So it's something where you can ask them to post information. So if you have friends and family who have a lot of followers, get chummy with them, because you might have to tap them for your first campaign so your follower base is even bigger. And most of them do ask for some financial information. I'll mention at 4 o'clock, He was a super minimal, but they do ask for some type of finances, both what money you've made so far, how you're managing that money. For all of these, as you go for more advanced crowdfunding options, including that with equity investment, they're looking for more detailed information for your financials, as well as the regulatory forms you have to complete to participate in an official crowdfunding platform. And they are at that point looking to see if you do have proof of concept, you've tested the waters, you do have people who are bought from you, you do have some revenue and some prior experience with crowdfunding. Again, next week, when we get more into the equity crowdfunding option next Monday at 3 p.m., we'll go into more of that information. Oh, yes, great. Thank you. There's a great link in the chat walking you through some of the campaigns, and thank you for adding that. So where can you get help? And when I send out this slide, I'll have our contact information specifically, but you can get help through DSLBD, our Innovation and Development team, specifically the District Capitalized program that I run. I'll be happy to give you help on that. 20 Degrees are on the phone right now. They'll be available too on the Wednesday webinar as well as next week's webinar and the coaching. And a part of the 20 Degrees team is also the Marigold Effect with Pooja, who's giving me some guidance so far. And then that guide that I mentioned, the toolkit for crowdfunding, that's available online to download, and also the companion webinar where we had businesses speaking about that. That's a great source to get information as well. And at the end of this pilot, we'll have a crowdfunding roadmap on the dcbusinesstoolkit.com website where you can access this and other help that's available. A quick reminder, if I haven't said enough, the webinar is at 3 o'clock this coming Wednesday, the 21st. It's about business investment, 1-1, equity and debt. And then on the 26th, we're going to combine it all together. Crowdfunding that we talked about today, investment that we're talking about on Wednesday will be combined next Monday to say how do you crowdfund an investment. An example of that would be through WeFunder. And we have a few minutes for questions and answers. I'm going to check in the chat. I'm not sure if Paolo or anyone else from 20 Degrees, if you were able to pull up any questions so far. I'm doing a quick scan.
I think we got most of the questions, but.
Oh, you did? Oh, wonderful. Okay. So if anyone else who has a question, feel free to drop it in the chat or come offline and mute yourself. I'm looking to see if we have any phone. If there are people on the phone and you're not able to unmute, you're also welcome to send your questions to inno.ed@dc.gov. That's inno.ed@dc.gov. And we'd be happy to answer them offline and share the information back with you, and also redacted anonymously share the responses to other people in the email.
Would you say that email address again, please?
Sure, and actually I'm gonna scroll, hold tight, it's gonna get dizzy. I'm gonna scroll back to the top so you can see it too. Sometimes it's easier to see that way. There we go. It's right here at the bottom, the very last line in orange, inno.ed@dc.gov. That's also the same email if you're looking to meet with our Innovation and Development team, with me about financing. You're welcome to email there and we can schedule some time. Hold tight, we're going fast forward. Any other questions or comments? If you've gone through crowdfunding yourself, if you want to come offline and share any comments, best practices that others might benefit from. If not, I want to thank you for joining us today. Again, feel free to email questions beyond today if you have them. We look forward to seeing you on this Wednesday at 3 o'clock for the Business Investment 101. And again, a reminder, if you think that you might want to explore doing crowdfunded equity investment and get the coaching from Sarah and the rest of the team members at 20 Degrees, you'll need to attend several of these webinars to qualify for that. So if you came today and show up this Wednesday and next Monday, you should be in great shape. So I'm going to pause here on our discussion about crowd building. Thanks again for joining that. And I'm going to stop the recording so we can start the next session on DC Kiva. Thanks again for joining us for this Monday. We'll be right back.